Okay, so we're back for our last demo of the morning, and we have two entries to make. First is on the Brown's return, and the Brown's return in the study guide was a 1099-G for state tax refund. So we're going to go into the list of clients, taxpayers here. There's the Brown return. I'm going to go into the federal section. Excuse me. Federal section has two Form 1099s. One is a 1099 box G, that is box 2. One is a 1099-G box 1. If there is a figure, some numbers in box 1 on the 1099-G, it's for unemployment compensation. If there are numbers in box 2, that means it's state tax refund. So we're going to select the 1099-G box 2. Again, interesting, they use one form for two different purposes. And remember, we had talked about the worksheet. So here's the worksheet. Opens up. You can bypass this, but we're going to do the calculation, and we're going to see how much of the refund is taxable. We're not going to find how much tax is being paid. The answer will be how much is taxable. So we've been given all the information we need. The state refund was on the 1099-G. That's $680. Prior year taxes. Total state local tax paid, Schedule A, line 5D. That's in the box that was provided to us in the study guide. It's $59.68. $59.68, if I have it right. Last year's total itemized or standard deductions. Well, they itemized last year. We were told that. It was $27,660. And prior year state tax withheld. So line 5A. What was withheld, we were told, was 2818 in line 5A. Right? Schedule A, line 5A in the box. So 2818, right? And then, prior year sales tax deduction. Well, they told us the sales tax deduction would have been $2641.73, including tax on a car they purchased. Well, the total would have been $2641.73, which rounds up to $2642. So $2642 goes in there. Last year's tax return filing status, I understand it was married filing jointly. Neither of the taxpayers, the taxpayer or the spouse. By the way, Robert Brown is the taxpayer on this. Neither of them claimed age or blind deduction. And so we can now just say continue. The calculation will be run when we save it. And where are we going to see the result? Well, notice there was nothing up in the adjusted or federal tax owed or state, and just now $176 appeared. That's their adjusted gross income. That says income subject to tax. So as I mentioned just a few moments ago, they will be taxed on $176 of the $680 they received on their state tax refund. And there you have it. It's as simple as that. We're going to exit, save it, and we need to do a new client search because we want to report alimony. The alimony is going to be on the Jones return. Notice that Elizabeth Jones is the taxpayer, if you will, the taxpayer on this return. We'll go into the federal section. Now, this is prior to January 1st, 2019. It happened, or the decree agreement, the divorce agreement, was in 2014. So we know that for the payer, it's a deduction, and for the receiver, that was Elizabeth, it's income. That's why we're out here in the income page. So we scroll down under income, and there's alimony received. I'll select it. Remember, Elizabeth was the taxpayer. There's the taxpayer box. How much did she receive? $4,200 in the year. When was the agreement? The divorce agreement was December 23rd, 2014. And that's it. It's complete. It's been entered. We're going to say continue. Same as the last return, the Browns. Notice the AGI. The AGI is now $4,200. That's what she received. That's showing as income for the joint return now for the Joneses. So that's it. It's as simple as that in terms of entering the numbers. Again, if it had been outside, been since the 1st of January 19, there would be nothing. But in terms of tax implication, but the adjusted gross income. And that's it. So I'm going to close out with that.